The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it is always good when you could start a week in the market trade with green on the screen. Pretty much a risk on day across grain and livestock futures, with soybeans showing some good strength and a really strong rebound in cattle futures, mostly limit higher on the day. Let's take a look at things. Joining us now for market analysis, John Heinberg with Total Farm Marketing. John, thanks for being with us again here this week. And as I said, not a bad way to start a new week in the trade when it's green on the screen. And, hey, we'll take it. We don't know where the week's going to end at this point, but we'll take a good start to the week overall.
Yeah, we will. And it was commodity wide today. It wasn't just in the ag markets as well as in the equity markets. You saw that there. Kind of the opposite of what Thursday was when we had the strong selling session that was basically market wide. So like I said, little risk on trade today. Prospects of government shutdowns coming to an end. We'll see if that gets finalized or not. So, and with that, breaking the dollar, strong move in gold, and it just saw the whole commodity space just kind of follow suit. Now we do got some individual things that may be impacting the ag markets as well. That we'll cover. But the biggest thing is a good start to the week here, and now we'll see what Tuesday gives us. Can we finally push through some of these resistance levels again and keep these markets moving, or is this just another test of some pretty tough barriers that we can't get through?
Well, let's talk about these grains first. Soybeans, I mentioned the leader, little bit of strength in corn, and again, we've been talking about how we've been lacking in data points, but we have been getting export inspections, those out again on Monday. Some decent numbers, but nothing inspected in there. China, I know that was one of many little nuggets that I saw traders talking about, and folks in ag spaces, Twitter and things like that, were mentioning that we didn't see China business on the export inspection. So wonder if that's one little nugget to keep an eye on here, John.
It is. I mean, it doesn't mean they were taking shipments. I mean, realistically, the government got shut down right away on the end of October. So this was the first 6 days of November. So we'll have to see. But that is something I was looking at myself today, just seeing if they happen to show up on the export inspections report, and they did not. But those export inspections, I guess, given the conditions, an okay number. When you look at it historically, not an okay number. Okay, we're looking at total soybean export inspections, still running about 2.5 million metric tons under, about 5.5 million metric tons under last year in this time window. And if you put it on the USDA pace, or about 100 million bushels, 120 million bushels, maybe too far behind the USDA pace. So obviously that keeps this balance sheet a little heavier if those numbers still continue to hold true. Again, that Chinese business is going to be just key in that regard to keep the USDA forecast online. Okay, not so much make it bigger in terms of exports for the marketing year. So we'll have to see how that plays out. Again, it wasn't the best number, but it's at least good to see some business, continue to move some of those beans. We had some good early sales to non-Chinese customers. Now, the only problem is, and we kind of saw the reaction of it maybe last week, U.S. beans actually kind of got themselves priced out of the market here. That was some of last week's pullback, was on that type of talk as well. That U.S. beans just got expensive. Not only did we lose maybe some potential Chinese business, but we also saw some non-Chinese customers shift some sales over to Brazil again, especially for that new crop coming in the spring, which unfortunately looks pretty good right now with the weather forecast in Brazil and planting pace, online here around that 60% mark here for last week.
I wonder too, starting the week on a good note, but I know a lot of folks are going to be keeping their eyes on Friday's USDA reports. We're going to get data. A lot of folks are wondering what this data is going to look like amid the shutdown and more. So I think there's that maybe cloud. I don't know what term to use, if it's a cloud or what, but that's going to, I feel like, hang over this market throughout much of this week until we see that data, John.
I would agree. And, on the other side of that data, how accurate is that data going to be?
Yeah.
I mean, again, you understand the USDA was basically told on the 1st of November or 31st October, hey, let's get a report together. I'll give you 3 extra days. And so immediately farmer surveys have to go out electronically or even by mail. USDA said out they were going to get field samples. We'll see how accurate those are in terms of, the quality. We're 75% harvested, or, in that window of what field samples are they getting? So what's going to probably happen for both corn and soybeans, we'll get the numbers. They're going to be what they're going to be. If they're bearish, which I'm kind of expecting them, just given the process that the USDA goes through, keeping yields still relatively high for corn and soybeans, they probably won't do a whole lot on the demand side because it's just pretty early to start making demand cuts and chops unless there is some major yield moves. But the market will see the numbers. You'll see the computers and the algos and the AI traders will trade it. But then the market, in terms of those traders who have their thought where the market is, they'll fall back into place again and it'll adjust the market right back. So it might be a very volatile end of the week and maybe even into Monday. We'll see, especially what those numbers are. I'm just kind of talking to producers, let's not be foolish here. Let's keep some balance in. We've had a nice rally of both corn and soybeans. If we happen to push through these resistance barriers this week, I'm going to be looking at some cheap puts. You can get out into March corn and get some nice 10-cent puts underneath this market just to protect the bin. Let's hope we're wrong and we continue to rally to the upside. And especially if we go into that report with a little buying strength, I definitely want to make sure we get some coverage there just to make sure we're protecting the rally that we've had. Same thing in the soybean market. Obviously, if things get pretty ugly there and the demand's not there like the market's kind of anticipating, you can see this thing roll back to 1050 pretty fast, just given the supplies and the lack of business that could be out there. So there's a lot of question marks, and those are times that keep your reownership in, but don't forget about what's in the bin, and make sure you keep some balance and protection.
And I'm glad you said that. I was going to ask you about it because you think about what could be a volatile day. We don't know what the data is going to look like, protecting the rally we've had. But even on the flip side, maybe the data comes back really bullish and the next thing we know, this top side opens up. I mean, there's so many scenarios that of course could play out. So again, it just comes back to making sure you're doing something to manage your risk in here with so many unknowns in front of us at the end of the week.
Yeah, very much so. And today, for working with my clientele today, we had some calls for soybeans. We're kind of back up to where we kind of ran out of gas last week. So we moved some money to the sidelines, still kept those calls in. We started working on some put strategies out into May today just to protect the bin too, just some safety valve type plays. Because there's a lot of things going to happen between now and May in the soybean market. Obviously, if Brazil weather continues to be good and that crop develops nicely, you're looking at 178 million metric ton crop coming on top of last year's record 160. And realistically, everybody was talking about the little business we got from China, a week or so ago. And then there was 20 cargoes purchased in Brazil. 10 of those were a new crop for this coming spring. It's going to be just like last year. It's going to be real hard for us to find business after that soybean harvest begins there in Brazil. And if you remember looking at the charts, last year's low came in April. So that's some of the reason I'm looking at May area for some protection under the bin. But if we're wrong and the market keeps rallying, great. You've got the bushels. We can make cash sales into it, or you've got the calls, and we still keep our upside available. But balance is a key in a volatile market, and so that's some of the things we were working on. Kind of the same theory in the corn market as well. Again, corn's a little different story because the demand is so good here, but if we get some set of numbers that are out of whack or something that just causes the market to get a little bit panicky, the funds are still sitting on a short position. At least that's the estimates are saying, they may want to push it again, especially if the bean harvest goes well and acre numbers don't move like the market could be anticipating. Just keep that balance in there and then protect rallies. If you don't want to make sales, then throw a put underneath of it. You still got the upside wide open, and the bottom line will go higher if the market does.
And of course, remember that risk of trading futures and options can be substantial. What about the wheat complex, John, real quick? That's kind of been stuck between soybeans and corn here. Pretty decent day there on Monday. Any notes for you across the wheat trade?
Again, looking at the export inspections, solid numbers there in the wheat market in terms of where we are for export pace so far this year. Obviously, again, oversold it a little bit the last couple of days. The high flyers like beans and wheat got knocked pretty good on Thursday last week with that turn down, followed through on Friday. So I wasn't surprised to see this thing come back up a little here. I think the money flow is still pushing the wheat market a little. We're still hoping we get some Chinese demand. That's still the talk that's out there in that regard. So with that, the wheat market to me has been one of the leaders keeping the corn market in place. The corn market just doesn't seem to want to go anywhere here these last couple of weeks, but that wheat market at least has some things kind of maybe working for it right now. But again, if we get much push higher there, we'll have to keep an eye on it. Obviously, you got to protect value when it's there. Again, we're not one of the world's major players in the wheat market. So if you get some marketability and some profitability, build some floors, make some sales, go from there, and at least make sure you protect that bottom line with good balance.
John Heinberg with Total Farm Marketing is our guest analyst here today on Market Talk. Let's go talk proteins, and let's start with cattle. Both live cattle and feeder cattle futures sharply higher day, basically a little bit higher across the board as we look at things here at the close after Monday's trade. I was curious how cattle futures were going to trade to start the week. I know there was more talk over the weekend by President Trump about a renewed investigation into the big four meat packers and things like that. And I was very curious how the cattle markets would digest that, plus all the recent sell-off and volatility we've seen. Well, it was a positive day Monday. Now I think it comes down to what does the rest of the week tell us in cattle, John?
Yeah, very much so. And, somebody on our team asked, what's out there for cattle news? And I said, well, let's just look at all the headlines that are out there right now. First off, you got the DOJ looking at the Packers, anything going on there. Wouldn't be surprised. A couple of my guys were talking this morning, guys, in terms of producers. Maybe we'll throw a little extra cash in there to get the Department of Justice off their back a little. So there's some optimism there. Obviously, too, government shutdown getting done, a possibility here. So the nation's largest employer, which is the federal government, is basically going to get things moving again. That brings money into the system that can fire up demand. I do think the government shutdown was a big part of the beef sell-off, again, with just without those salaries out there for people. Plus, at the same time, SNAP benefits will get put back to full funding. So there's some opportunities there again that we can keep some decent demand in the beef market. So I think those things, plus just an oversold market that is more based off of technicals versus fundamentals, just gave it opening for this market to really kick. I mean, you go today, you look at the feeder cattle market. Prices are still strong on the countryside. You had a big discount of the feeder cattle market to the index. We're still $10 down going into the end of the day on that November contract. And then at the same time, live cattle just kind of followed suit as it was one of those triggered to the upside type moves today. So we'll have to see. You said the best words there. What's tomorrow give us? Got expanded limits again tomorrow. Do we get some follow through? Or is this going to be another window to take a look at hedges if we get a few more dollars higher to get out into April and June? Those 230 numbers looked a long way away a couple days ago. And now we're kind of right back in that 220, 226 area in those April and June contracts. So that's some of the balance is going to be what we got to see there. Now, the other side too, going to get cattle on feed here on the 21st. So there's, we'll get some fundamental pictures again in terms of that regard. Again, really nothing has changed. Beef demand continues to stay strong. Now, one of the things too with President Trump talking about, backing Ozempic and lowering prices for people, that adds protein demand as a large portion of the U.S. population is on those types of programs, and that needs good, clean protein. And I think that's some of the reason we saw the moves that we did today, as well as in the pork market as well.
I was going to say, I mean, you look at hogs, really solid day there, up, a little over 3. I mean, good, strong triple-digit gains across the futures. So maybe some spillover to your point, but also maybe just some good early week support in general for hog trade, John.
That hog market's been what I've been scratching my head about for about 7-8 days now. I thought we'd get down to that $80 level. It was getting a little bit cheap on the December, even though the cash index has been kind of drifting down to it. We did see some firmness in the index at the end of the week, and then we dropped, or early in the week last week, dropped a couple of days on Thursday, Friday. Cash trade again was fairly quiet today. A lot of it wasn't unreported, but again, let's just go back to the prospects of government getting back in business. money flow into the SNAP program. We saw a big jump in retail values, just still got $102 carcasses at midday today. So that should help out that cash market. Market's been heavily oversold. I mean, we've been down how many days in the last couple of weeks here with an index that's still well above the December contract. So it felt like it was kind of one of those days. I've had a couple guys still in the market, finally talked to them today and said, like, there it is, finally, that we saw some money flow back into this hog market. Now, again, just like live cattle, tomorrow will be a key day. Is this just a head fake and a blip, or we got some strength here? Like to see that December contract get up into about the 85 window. 100-day moving average is up there. That might be a spot that we could see this market pause again.
What about the dairy complex? I'll just ask you real quick there. Any notes as we kick off the week?
Again, the funding of SNAP will be a big piece of that. Again, I think that was a factor. The other side of it too, the milk market's just been kind of resilient here. I mean, it's not good prices overall with 16s and 17s on the board compared to 20s or 18s or 19s. But, there's been a couple chances here with some of the data that we've had that this milk market could take a pretty good punch. And it just kind of seems to have fought it off. Maybe that's just the time of the year, the demand for cheese, things of that nature. But again, still looking at some opportunities, get some more hedges in if we can get December back up into those low 17s, a little higher than 17.10. Going to be working on some hedges there. As again, we are going to get 2 milk production reports this month. Okay, today we're going to get the October numbers, and then we'll get the November numbers on schedule. So it'll be interesting to see what those numbers come in at today. At least kind of telling us what the trend is. I expect the trend to still be good number of cattle, probably still increasing, with production still being very, very strong. And that might be something that's just going to limit this market from really making any good upside moves.
John, as we wrap up here today on the show, final thoughts and something maybe we should throw out there too as a caveat that Tuesday, of course, is Veterans Day. It's a holiday, but the markets will be open. Shouldn't see much effect, though, with the markets open on a holiday, John.
More than likely not in that regard. Obviously, it's more of a bank postal holiday, so that will be the impact there in that regard. But yeah, markets will be trading, and so things will be active as normal. Obviously, we'll see how this thing wants to lead after today. What's going to be the move the next day or two here? Is this going to confirm another push home and push higher? Or was this, like I said, just a bit of a head fake after a pretty rough close to the end of the week last week?
John, anything else final you'd share or reiterate with folks here today?
Just again, stay active in the marketing side. Corn crops mostly harvested, thinking about 90-some percent, 92% now. So that means kind of the harvest pressure's out. So now it's going to come down to the cash market and basis. It's going to get bushels moved. So again, make sure you're paying attention. All of a sudden, some of these producers I've been talking to are getting some basis pops where they get a chance to move some bushels. So just stay active. And again, keep balance in your portfolio in terms of how you handle your grains. There's still a lot of global supply out there for both corn and soybeans that we got to work through here. So protect rallies, take advantage of them with cash market. But if you want to stay in the game, there's a lot of call strategies or future strategies that we can work with.
John, how do folks get in touch with you if they want to have a conversation?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heimberg, Total Farm Marketing. Always good to talk with you. Thanks for joining us. Have a great one. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.